Hi, everyone, and welcome aboard. Thank you for joining us for Trading Buddies on this Monday, the 30th of January, 2023. It's my anniversary today. Happy anniversary, darling. 22 years. 22 years today. Amazing stuff. Last one only lasted 21. Tell them. Don't tell them. It's all good. Let's start. Private joke, sorry. Let's start by having a look at gold, shall we? Wow, gold's had an interesting start to the day, I've got to say. And let's have a look at that. Range bound. We'll love it when it's range bound. The only problem with gold is when it's range bound, it doesn't give me what I want to see, and that is lower highs off the top and higher lows off the bottom. It just goes, just hits the level and goes. Gives me the SH1Ts actually, because there should be more warning for us to participate in that range. Let's see if we can work that out, how to actually trade that down the track. Because when it goes into range, it certainly goes into range. It's very, very clear. Is it not that since, where are we? Mid-January? Maybe let's call it the 19th of January to today, which is what, 12 days? Only 10 days of trading, I guess, but it's very, very clear what's been going on. And today, no exception. Have a look at the hourly chart. We started here with a gap. Hang on a second. I'll go a bit tighter. We started here. And we went to here. We went to here. Now we're down to here. And the bottom of the range beckons, does it not? That is the range of the previous 2 or 3 days. So what we dealt with today is no chart. Really? Thanks, Harry/Gary. Let me see if I can fix that. Try again. Hopefully that is now restored. And we do have a chart. So, thanks, mate. So we've got beautiful range in play here. It's absolutely sensational. Doesn't get any better than that as far as the range is concerned. And as I said before, the difficulty of trading that range, unless you've got a wonderful scalping method or methodology, is where's the lower high? Where's the higher low? You know, it just doesn't produce that. Once it hits the level, it just goes, woof, woof, here we go again. Anyway, we're going to try and trade the breakout today of the Asia session, which of course began around here somewhere. And there's the high, that's pretty clear. And the low has not yet been determined, given that the current candle is still forming. If it were to be the case right now where we've got this is the high and this is the low, then we would place an order long at that point with our stop loss here, and we would place an alternate order short with our stop loss there, and that's exactly what we'll try and do. Much prefer to see, as always, price come back to the middle of that range so that there's plenty of room for toggling, if you like, prior to the actual breakout. And that's what we saw on Thursday. Thursday was a good one. I think we're up here somewhere. It was up here somewhere. We got taken in short, had to go through a little bit of pain before it actually did go down a little bit better than 1-to-1 there. I don't suggest that you hang out for that 1-to-1. I suggest you take your profit wherever it's available. And generally that's going to be at a trade line, a horizontal level, or a pivot. But I'm more content with this form of breakout than I was with the pound earlier. So I think this is probably the way that we're going to develop with this breakout system with London Open. And there we go. London Open is with us. So we will go short at 1923. I think that's the low there. And we'll go long at 1935. So let's place those orders. Now, for those of you here for the first time, firstly, welcome, but please take this as a test and not a proven system, right? So you can see the volume that I'm going to trade this at. It's extremely, extremely low because it's basically forward testing rather than anything else. But so far, I'm happy with it. I think it's proven to be a consistent, if you like, producer of pips. But you've got to be prepared to take profit early. So pending order sell stop will be at 1923, as I said, 1923.0. And our stop loss will be at the high of the range, which is at 1934 and change. So we'll call that 1935 and place the order. Okay. So we're set for the short. Now we need to get set for the long. The long will be, oh yeah, that'll work. Buy stop at 1935. So the reverse of what we've just done, basically. Looks like we may not have to worry about that because I think the short may be triggered.
Morning, mate. Just
hello,
incidentally, when you're ready, I've got a trade as well.
Happy days. I'll get to you very, very quickly. No Stop problem. Loss for the long will be 1923. I'm not sure we have been triggered yet, but we'll come back shortly and have a look at that. If the short's been triggered, obviously cancel the long. And let's go to Ash. What you got, buddy?
I have got silver short. So it will be in line with what you're doing, actually. So let me just bring up my thing. Now we know we tried to get in this last week, but we got stopped out of this one. So I'm going for it again. And here it is here. So looking at this on a 15-minute time frame here, we can just see a little bit of a breakdown of this trend line, and it looks like we are just getting under there. So I managed to kind of get this trade on, but there's still plenty of time because it's not that much. You know, if you look at that high there, it's around about $22 away. And coming down to the very, very bottom, it gives you a 1 to 1.5 to 1. But if we switch time frames here and see if we can get to, really, it's trying to get to the bottom of the range and below. You know, I really want to see if we can get a trend actually sort of like beginning and seeing if it can fall down. So there's a potential.
It's had a hell of a time trying to do that, hasn't it? I mean,
yeah,
it's been stuck there like glue to a blanket of. Well,
yes,
I was going to say something else to a blanket, but glue to something.
Yeah, it absolutely has. And yeah, as you say, very, very difficult. And you know, it might well fail again. I think maybe what's in our favor this week is that it's Fed week, and we might just start to see a little bit of profit taking. It's not to say that this will break down, because the profit taking won't necessarily result in a big trend to the downside unless the Feds give us some kind of surprise. But I still think that there is, you know, this to me, well, difficult to pick, but I would say this is probably the strongest level of closing prices just along here. And if we switch this to a line chart instead, just to make it a little bit cleaner, then we look along here, there's a touch here, there's a touch here, and there's a touch here. So that looks like the strongest level. And if you were to measure that down, it would still give you near enough, not quite a 2 to 1, but it's close enough, you know, to a 2 to 1 trade. So even if that's all there is, then it's I think still a worthwhile trade, kind of getting in the market. So that is the current trade, mate. It is for silver, and if your gold trade triggers, then it's probably going to do the same thing. And you could hedge this,
actually.
Right. So I mean, you could hedge this. You could hedge this position against gold. You could go gold long and silver short. But I'm attempting not to do that on this account. I have done that on my other account, but I'm trying not to do that on this account. Just trying to just take a genuine straight trade. The hedge trade would be useful if we're going to hold on to this for a period of time. So anybody that's looking to maybe hold on to this for maybe the whole month, that trade may well be worth it. But because I'm not intending to do that, and I don't really think this is going to break down either. I think we will get a lower low, and I think we do intraday kind of get some push to the downside. That's why I'm taking the trade, but I'm not taking it because I think silver's breaking down over the long term. It may, but I just just don't think it will. I mean, it's still that recessionary concern, but look at this on the weekly, you can see it a lot clearer. And I think this may well be worth attempting to go for. It would make it a fantastic trade if it did come down there. That would give us around about a 6-1, I think. Can you still hear me all right?
Yeah, mate. Yeah, you're all good.
Cool.
Is that your new fandangled machine?
No, it's not. No, I'm having to send that back. It's done weird things to my system, so I'm sending that one back, and I'm back on the old one for now. But I am intending to get another one. There's Jabber apparently make quite good ones. I don't know if you heard of that company, but they make quite good headsets. So I'm going to go for a Jabber next time. Yeah,
Jabber. Yeah. He was that big thing in one of those futuristic shows.
Yeah, the headphones that you've got, I don't know whether they're a bit too powerful for my system. It shouldn't be. This system was ranked right up, but yeah, the last one was just. I thought my screens were collapsing because they were just flickering, and I thought I've just bought this screen and this is going. And then I unplugged the headphones and it's back to normal again. So it's definitely some power surge going on. So yeah, I will get the new one. But that's the trade anyway, mate. We'll talk about the rest of the market after you've done your little roundup and
all right,
get to it for then. There might be another trade in the FTSE short as well later.
Happy days. Both of these trades, although the gold trade is very much a case of test material, and as I said before, those of you here for the first time, and welcome to you all, by the way. Wonderful to have you on board, and thanks for being our trading buddies for the day. I hope you find something to take away from the show, and if you would like to contribute at any stage, you're welcome to do so either by the chat or by coming on screen if you so desire. That would be welcomed. Absolutely.
Yeah.
I think everything's and everything really starts for me by having a look at this chart at the week, and it's the dollar index.
Yeah.
And where we're at with the dollar, is directly relatable to both the trades that we've just taken, in my humble opinion. And I'm looking for dollar. I'm looking for a dollar bounce to the upside.
Yeah, me
Where
too,
does
mate.
that go? You're saying, yeah.
Yeah, absolutely the same.
Well, the level I've got is 103.50, and I think that's completely on, and that's going to translate to everything across the board, including the major currencies against the dollar, the indices against the dollar, and everything you can name against the dollar. So I'm expecting dollar strength this week. What the Fed does on Wednesday, and I'm sure you'll go through this, Ed, when you get there. It's a massive week in the trading month, because we've got the three or big bosses, I suppose, or big guys. You've got the ECB, you've got the Fed, and you've got the BOE all giving us rate decisions this week. That will be super interesting as to not so much the numbers, because they're pretty much priced into the market, and I don't expect too many differences to that. But in particular, the Fed, the market in general is going to depend on pretty much what they say, and that will be driven on overnight Wednesday for most of us into Thursday. But Thursday's got it. Yep.
Sorry to cut in again. I actually do have another trade.
Yeah, go ahead.
Okay, sorry. Just shaping up today this morning so far. So the trade is for the Swiss yen short, and it looks like we've had a half decent push to the upside here over the short-term market here. So price is around about the 140.90 level, and stops are going to be, looks like around about 57 pips to the upside. This may well be something that could last a bit longer. When you look at the weekly chart here, what we've got is this bar last week looked pretty good. So it was a bearish end to the week last week. Looks like we could be forming a head and shoulders pattern as well, which could take a little bit longer to form, but at least coming down to these lows, and if not beyond, there's a trend line that would suggest that there's probably some stickiness at these lows. So that would probably be the target. But anybody looking for longer term position, I think that there's a pretty good chance that could happen as well. The BOJ do appear to be one of the most hawkish, or they might well be forced into being one of the most hawkish is probably more to the point. And the S&B tend to be, the Swiss National Bank tend to be one of the most dovish. So I think there could be an interest rate differential coming up with the Japanese, and I think that this may well be something that is tradable. We've got COF leading indicators from um, um, from Switzerland, actually, which looks like it may well have provided this upside. Now that came in at 97.2 with a forecast at 93.3, previous at 91.5. So if this does fail after a positive print like that, then we might well get a decent move to the downside. So, get those stops in place. COF leading indicators are leading indicators. They're telling us what the expectation is going to be for the future, but over the short term, I think that we might just get a move to the downside. We've got jobs numbers later tonight from Japan, which if they come out and they're positive, then that's going to probably push this market as well. So buyers look like they're coming in off the back of that positive print from Switzerland. But if this fails, then we're in pretty good shape. And it looks like we've got a decent price here. And I think those stops correctly should be up there, because if this does break through and closes above this level, then I suspect this is probably a switch of trend. So they're the two, mate. We've got silver short and we've got Swissy yen short.
All right, mate. If you go back to your weekly chart, I've got a bit of, I suppose, consternation within my own trading methodology. And if you go back 3 weeks, we had that big bearish engulfing bar.
Yes.
Followed by, and that's a game changer bar for me, right?
Right.
Followed by an inside bar, which is a game changer, what I call a game changer plus bar. I've got my own terminology for all these things. But the one thing that. Yeah. So that to me is a short underneath the buying bar.
Yes.
Yet I didn't take it last week because I thought the relativity to, or the close proximity more than relativity to the next support level was too close, and the reward to risk was pretty much up the putty. Yeah. So I didn't take the position, but I did say that I'd be looking for a better entry, so a better price to enter at. And you may well have found that right there. The only thing that did concern me is when I have these game changer bars, and therefore the game changer plus bars, I need to have what I call the big boss agreeing with the direction. And I just don't have that. So if you go to the monthly chart, the big boss is telling me that we're still in an uptrend.
Yes.
So I don't have a double top. I don't have an inverted. I don't have head and shoulders. I don't have a bearish engulfing bar followed by a lower high. That's the only thing stopping me for going with you.
Yeah,
on a bigger time frame.
Do you know what, mate? I mean, this chart makes the whole trade actually a lot more interesting. And this is the one time frame that I hadn't really considered, because if this does break down, it could come a long, long way. It really could be a crazy
100%. Yeah.
But you're absolutely right. This does sort of suggest that we are still in an uptrend, because this was the previous resistance point, and we didn't get below this low, so we haven't really sort of begun to sort of like go on a lower low. And on the monthly, it does suggest that we've got this. Now, the seasonal data suggests that we have got a Swissy yen short around about mid-Feb. So if this kind of let's say a couple of things happen here. If this floats around in this area, the short could well still be on. If we get stopped out and it floats around in this area, the short could still be on, but we might be a little bit early. If, however, a better case scenario for us happens, and what we actually get is a push to the downside. So this kind of happens for the rest of the month, and it closes under this. I know we look at charts slightly differently, because you're obviously often looking at the wick, where I'm much more interested in the closing price. So if the close,
my mother told me not to do that, by the way, but I always have.
What? Don't look at the wick.
Yeah.
So if the close, so let's say the bar looks like this instead, and that this is what we end up getting on the monthly, and it closes under this close. That to me is a lower low. So I would be interested in saying, well, okay, we might well be able to hang on to this for a decent position. But yeah, you're absolutely right. As things currently stand, the primary chart, the primary trend is still up. When we flip to the weekly, the primary trend, the intermediate trend is definitely down. We've got this support level here, closing support levels here, broken down, tested, rejected. Another closing support level here, down, tested, and rejected. So and it is under this level here too. So really, I suppose I'm trying to sort of pick it up on the next turn and see if we can, push down further. And as I say, it might be a little bit high. It might be that these stops, we might get stopped out. And I trade off 15-minute time frame, so the stops are always going to be tighter. It does mean if the gains come, they're much bigger, but it does mean you get stopped out a lot more, which, as we discovered last week with silver, that can happen. So we'll see what happens. But yeah, I completely hear your point about the monthly. I think that the primary trend is still pushing to the upside. And we are getting close actually to where that primary trend is more important, because we're only a day away from the month close. Which does mean that we would be 2 weeks early, really, on the potential downward move on this on the seasonal data. COT data is also suggesting that the short is coming. I'm not saying it's here, but it does suggest that the short is coming. And if we have a look quickly at the COT data, I did show this in the show yesterday, so it might be old news to some people. But this is what we're looking at for the COT data. If we look at the Swissy, we've seen progressive selling over the last sort of 4 weeks. These are weekly bars. There's 1, there's 2, there's 3, and now we're in the 4th week of progressive selling on the Swissy, and there's definitely in a downward trajectory on the net positions. If we compare the same on the yen, what we're actually getting is progressive buying.
Yeah, the reverse.
And this has been going on for quite some time as well. I mean, ever since the low was found in October, but this is where it really started to pick up. So we are starting to see the COT report suggesting that people are getting interested in the yen. And as I say, on shorter term timeframes, you tend to get stopped out more. And you've got to take more trades to try and get the one you're going to get. But the rewards are there. So it does depend now from here which style and which way people want to play it. If they want to trade it at all, they might not want to sort of like take the trades that we're getting into. But I'm just sort of telling you, my thinking on this one, and the way that I approach the market. If you were looking,
can we trust the yen? Do you think?
That's the difficult question, mate.
Short answer is going to be no, but
yeah,
can we trust it at the moment? I suppose is the question.
I think we can, because in this way we can. The Japanese central bank, BOJ, has really fooled the market, because it said it was not going to tighten monetary policy, and it wasn't going to manipulate the yield curve control. It was going to continue to manipulate the yield curve. It was still going to attempt to affect the yield curve, but with yield curve control. And the way they do that is by buying bonds at a specific price. But what they did then was, and they said they weren't going to change it, and they've been sort of like really sort of singing on that hymn sheet for months. Then what they decided to do was change it by changing the band. So rather than buying bonds at a lower yield, they've now said that they're going to buy them at a higher yield, which pushes the bond price down. Because people really now know they can get a different price for so they will not buy the debt unless it gets to a specific level now. So that does actually tighten policy. They're not now buying debt in the same way. When central banks buy debt, they add liquidity into the market, which enables growth. What the BOJ have done is say that we're not going to buy the debt at such a low rate. We're going to have to pay. We're not going to buy the debt at such a high rate. We're going to pay lower for it. Which means that there's a tightening going on. So in that way, we can trust it because we don't know what the BOJ is going to do next. The fact is they've moved, and they haven't moved for years. And that might well be enough to kind of trigger a decent move in the opposite direction. Now, the trade's not working out currently, but we'll see what happens, mate. It's worth taking on. We are at the end of the month, so the markets do tend to kind of be a little bit more tricky. You can kind of get some decent moves, but it gets a bit trickier. Looking at the FTSE very briefly, this also looks like it might start coming down. It looks like we've had some yen strength as well this morning because of a lack of confidence. But look at that, FTSE attempting to get up to this level and bang, it's straight to the downside. So looks like the FTSE's attempting to break down as well. And if you look at global equities right across the board, this is the NASDAQ doing the same thing. So this morning, we're seeing negativity in the market, which should actually push the yen. Difficult against the Swissy, agreed, because it's also a haven currency. But we are getting that little bit of weakness sort of starting to step in on some of these risk markets. WTI, same thing, big move to the downside so far if you look at the hourly. But the 4-hourly looks like it might well be breaking down patterns as well. It's attempting to anyway.
Yeah, I think attempting to is a good summary of it, because I think all of these markets, as I see them at the moment, have got issues in terms of where they are. So that the momentum seems to be, in that case, to the downside, but it's also at the bottom of range. And I think everything is very similar at the moment. And it wouldn't surprise me, given the week that we've got ahead of us in terms of news, that we do see ranges, and I'm actually hopeful that that's going to be the case, because that will suit me down to the ground.
Yeah.
I'm not seeing breakouts until we get some news, but
exactly. there could well be a bit of positioning beforehand, but yeah, I make you right on that. And it's one of those, isn't it? You try and trade this kind of data release. You can easily get run over with spikes in volatility and everything else. So it's really not kind of mandatory to trade into the, you can trade into the news as long as you've got a position on early enough and you've got your stops way out of the way. But to actually trade the day of the news and trade the specific product that will be related to the news, i.e. the Fed raising interest rates and the statement, trading the dollar at that particular time is going to be a lot trickier. Which is why I'd quite like to get into the silver trade and see if it can go for us a little bit, to get those stops at break even, or at least kind of give me some time to think.
100%. I think there's ample opportunities this week to get into the market before the news, and as a subsequent after the news. But before the news, I'm pretty keen. I'm a little bit hesitant though until we see those levels actually hit and reversed, if you like, to do so. I wish I were trading on the smaller time frames at the moment, because I think that's where the opportunities are going to be, not on the longer ones.
I think you're right, because the longer ones are going to be dependent on trend, and what's going to happen here with trend, and if we think about what caused the US dollar as an example, what caused this huge move to the upside? This was all about them raising interest rates. What's caused this huge move to the downside? This is really all about the expectation that they're getting close to the level of interest rate rises. Now, even a move to the upside, even sort of the Fed going at 25 basis points, they are still close. They're still close to where they are finished. Now, if they finish, in the next, let's say 6 months, the rest of the market won't be that far behind them. So then we're back into range territory. And I suppose my point is that the difference that the interest rate narrative created were trends. They really, really good, long, expansive trends. Hadn't seen this in the currency market for quite some time, and that period may be about to finish. Over the next 6 months, things calm down again. I suspect we're back
Praise the
down
Lord
to.
if it does. I'm
Well,
over these trends.
yeah, I
Don't
was
like
going
them.
to say, mate. When we kind of think about trading, we kind of we kind of put ourselves on the boat of, are we a trend trader? Are we a range trader? But actually, we really should be able to dip into both when necessary, or don't trade during the periods when your particular strategy isn't in the right place. But we are probably sort of like heading towards something which is probably kinder to the range traders pretty soon, which puts it back to the short-term timeframes. These are for long-term traders. You buy the dollar, you hold on to it until it breaks down, and whether you get the higher, I don't know, but because you might have got stopped out around here, maybe this one would have been a bit nervy as well. But the same thing coming down. You may well have got stopped out around here if you've managed to pick it up on this low and push back to the upside here. But the trends do look like they might be just about to they're getting relatively close to stalling again, and that's going to be down to policy. And policy will eventually come into alignment. Particularly now we're seeing interest rates coming down. Sorry, inflation coming down. Not quite fast enough, but we need another external shock, really, if we're going to start to see policy panic and then trends start to change again.
Cool. No disagreement from me. I think right now I want to talk about the setups for the potential setups for the week, getting into those news announcements. Are you good for that?
No worries, mate. I won't be cutting in again.
No such thing. As always, it's all about what's relevant at the time, and if trading is relevant at the time, obviously that's what we talk about.
Cool, mate.
I don't think there's any trades for me at this very moment, but as always, I want to talk about the euro. So let's go there first and see where the euro sits in my watch list scenario. And first thing I look at always is going to be, where are we? Where do we sit? What's the big picture? And the big picture couldn't be clearer to me on the euro right now. We're at a resistance level. And interestingly, I don't know what you think of candle patterns, mate, at the end of the day, but this is, to my mind, a reverse three white horses, or whatever you want to call
Soldiers.
them.
Yeah.
That'll do. Because if you've got three white soldiers, generally you've got this one, followed by this one, followed by this one. In other words, a little one followed by a medium one, followed by a big one. That's what three white soldiers are, or in the reverse of that, three black crows. Let's call them crows. Now, to my mind, this at this very particular moment in time is it's hard to call it a temporary rally, but to my mind, it's so forceful, it has to come to an end, or a pause at the very least. And to come to that pause, there couldn't be a better position, quite frankly, than that we currently sit at.
Yeah.
So to my mind, there's got to be, this is a sell zone. It's not a buy zone. So when I put that into context, and I go to the weekly chart, where are we? Okay, we're broken above the weekly trade line or trend line, and I'm looking for price to come back underneath that, which means I don't trust price above the 109 level. Then I go to the daily chart, and I'll go a little bit wider on that one. This is the same area, of course, and we've just snuck back underneath that. Now, this is not relevant on a daily chart, the monthly trend line or the weekly trend line. So I've got to bring that down to a daily trend line, and I don't have one, and that's the problem I've got at the moment. 4 hours, maybe I do have something. I've got to get rid of that because it's not relevant. And when I say that, I don't trade with monthly trade lines on a 30-minute chart because that, to me, that's not relevant. That's what I mean by that. It's not about trading off a weekly trend line on a 30-minute chart. I need a 30-minute trend line or a 30-minute trade line to trade on a 30-minute chart. And thus far, I don't have anything I can trade short with at this point in time. What I did have earlier in the day was an untested daily pivot. That's changed, so I don't have the right or the edge, as I call it, to actually trade that. But now what I do have on the hourly chart, maybe even the 30-minute chart, is a resistance level that we're currently sitting at. So with my bias to the downside, all I need to see right now is price break out here, consolidate a little bit, come back underneath not only the trend line, but the weekly pivot and the daily pivot. If it did all of those three things, then I would be so confident this is going short. Wouldn't be funny. That's got a little bit of work to do, of course, to meet that criteria. But I wanted to point that out because I think if that does happen, so price comes up here, consolidates a little bit, gets back underneath the pivots, and then retests all three, daily, weekly, and the trade line, there's an entry underneath that short for mine. And I think that would be probably, I reckon you can trade that down to the monthly pivot. Okay, it's got 1 day left, but I reckon that's completely on the cards.
Yeah.
Certainly this level here.
Yeah.
And that goes along with my theory about the US dollar as well.
Yeah. I totally agree, mate. And this is the thing, isn't it? Because the data has been so negative, really, for the US dollar, and the expectation that the Fed are going to do something dovish, it has been on the cards for a long time. It's pushed the dollar, and it's pushed the dollar, and it's pushed the dollar. But everybody is really so negative on the dollar. The move in the opposite direction will probably be quite significant if it was to manifest.
Yeah, absolutely.
Which pushes you down to the monthly pivot.
At the very least, yes.
Yeah.
So that's why I'm keen on that particular chart. Hang on, I've got to go back to the waiting room in case there's somebody waiting to get in, which there is not, which is good. Or bad, considering how you look at that. All right, so let's go back now. I wanted to point that euro out because it does go along with my theme of dollar strength for this week. Had 2 game changer bars for the week, and really I struggled with the first of them. Struggled because I wanted to take the trade short. It is euro versus the CAD. Now, euro versus the CAD has been an incredible run for me for quite some time. And I got out of it here, sadly. It had a whole lot longer to go. I was in this for nearly 12 months. And I missed out on a good chunk of it. But as all things do, gravity gives way to money, and we got, well, pretty much a V-shaped recovery on that, if you look at it. But now we're sitting once again at this resistance level. The problem I have with this right now, and I'm keen to trade it short, I mean, that's vertical. That's amazing. That run that we've had in the last, or however many months. What, 1, 2, 3, 4, 5, 6 months? It's just straight up. There's just no respite. That has to stop. That doesn't continue forever, that's for sure. My problem is it this level or is it this level? Which is probably a bit of a cloud of a price. There's no real definitive level in there. Maybe that's it. I think that's the best level on this chart in terms of horizontal. And we're above that. So my thought process is, yes, we've got a tweezer top sitting at a resistance level, which is much clearer on the weekly chart, but we've also got this level here that we haven't tested or indeed retested. So then I'm looking for a bit of confluence. And that's what I see. So it does give me a little bit of a problem going short at the moment. That said, if I do want a smaller time frame daily chart, 4 hour, get a lower high, then I would have to trade it short. despite the fact that I have that level above here, because I've got a big double top sitting here. We've got the breakdown of that neckline, if you like, off the double top. We're retesting that at the moment. I think a lower high in here does get me short on EuroCAD. Should I trust the weekly tweezer top? Well, that's the consternation I had in my own mind this morning. The reason I didn't take it was because of the monthly pivot. The reward to risk here, if you're thinking, if you want to take a 200 and odd pip risk, you want about a 400, 500 pip reward, really, at the end of the day. And it's just not there at the moment. So watching it very, very closely. And I think on a smaller time frame, be happy to trade it, but not on the weekly. I think, as I say, the reward to risk is simply not there. Swiss EM we've already spoken about, but I'll briefly just reiterate what we said. Probably need to go tighter than that. That bar there was definitive for me, broke through what I would call the neckline of this range. And since then, we've had a retest. And again, the reason I didn't take that short at that time was pretty much the size of the bar. Again, the reward to risk to this level is pretty poor. So looking very, very closely at the top of this channel, and again, similar to what I just described on EuroCAD, we haven't hit the top of the channel yet. And until we do, I'm not super confident that that we're going to trade this short. So I'm in limbo with this one as well. I don't think this will be really affected too much by the news of this week. So I would love to see it hit here before I went short. I'm totally on board with the direction that Ash has taken. Just for mine, on the bigger time frame, I need it to hit a resistance level. So if we do get that, I'm happy to jump on board. In the meantime, to me, it just looks like a range, and geez, I'd love it to hit here. And I know that's not going to be good for your trade, Ash, but if it does hit here and give me a reversal lower high, then I think this is probably the trade of the week. I really do. Just right now, I'm not ready to jump into it. That's all.
Get it, mate.
Really, the theme for the week to me was none of the above. It was all about the Aussie. And I think the Aussie is overcooked. And I haven't got an Aussie index chart available on this particular platform, but to me, this has gone through a cycle, and it is overbought, and I'm looking for it to come off here. That's against the dollar, but it's very, very similar against all the other bunches of currencies. And I think the best of them this week to trade the Aussie against, if you are in agreement with that bearish, and it's only short term, to be fair, because I think the Aussie's got lots of potential upcoming. But I do see the potential for this to really suck back to the monthly pivot, give us a nice right shoulder even, and that would really look then like I want to trade it back to here. And I do, because I think that's exactly that's my plan, right? That's my game plan. But for right now, I think it's in the sell zone, and I'm just waiting for confirmation of that coming off this level. Give me a lower high in here, and I'm more than happy to trade it down to there. But there it ends. That's the trade, right? Get in here somewhere, get out here, and I think you pick up 3 or 4 to 1 there, no problems. So I think that's a real good opportunity, given what I've just said on the dollar as well. It just plays into the hands. It just plays exactly to the theme. But the other two, I think, are completely tradable. Would be Aussie Kiwi and Aussie CAD. The problem with Aussie Kiwi is it's already gone. I don't know about Aussie CAD. Let's have a look at Aussie CAD. Yeah, gone to a certain degree, but if you have a look at Aussie CAD on my bigger picture, which is the weekly chart, you can see the top of that broadening pattern, and we've come off that already. Last time we did that, look what happened. That's exactly what I'd love to see again, and I think this has got an amazing reward to risk probability if it does give you an entry. So coming off the top here, All I need is a lower high. And on the daily chart, I'm seeking that now. So this may happen by Wednesday, may happen by Thursday. But what I'm really looking for is price to bounce off this level, give me the lower high that I need, and then I think there's an amazing reward to risk trade available on Aussie CAD. Why would the CAD outpace the Aussie at the moment? Look, there's a whole lot of stuff going on with the Aussie, and I mentioned this a couple of weeks ago, where the university students coming into Australia were, particularly from China, in fact, mostly from China, were under difficult circumstances. Two reasons. One was the Chinese government said you can do your first semester. This is all international Chinese students. You can do your first semester in China rather than travel internationally and do it on campus. They've actually revoked that. Now with 3 weeks to go before first semester starts in Australia in university terms. We've now got a situation where the Chinese government say you have to go and do that on campus. So you've got now a massive migration issue, or whatever you want to call it, where all of the students have to be on campus in Australia. And we're talking about thousands. We're not talking about a couple of hundred. It's tens of thousands have to be here in Australia in the next 3 weeks to start. And that goes through all sorts of issues. I think I mentioned at the time where you've got visa applications have now dependent on whether you've got COVID tests going into the airport or coming out of the airport. I can't remember exactly how that works, but it's all messy, and it's just really, really hard to get a read on. But the chart's still telling me that, again, this is a little bit overbought, and I'm looking to trade it to the downside. That was a long way around that, I grant you, and I apologise. I don't really mean to go on for that long, but these are all these considerations that I have. But a lower high certainly gets me into short here on Aussie CAD. There's only two others. Euro Aussie is going along with that theme of Aussie weakness, but it's quite the reverse, which is weird. Maybe it's a good hedge, right? You remember 2 weeks ago or 3 weeks ago that I pointed this out to you, this false break happening on Euro Aussie, so Euro to the downside based on this candle here. It actually didn't work at the time, but guess what happened last week? Kapow. But guess where it's gone to? Straight to the bottom of that range. So for this week, I think there's two ways to look at this. If we come back into that range, so today it looks like the daily pivot. We came above the daily pivot. Sorry, is that the weekly pivot? What is that pivot? I've changed my colours. It's the daily pivot, right? So if we got above that and retested it, put in a higher low, then I think we can pretty much safely trade that back to the top of that that trade line or trend line, as it were. And if that were the case, without going through it, I think we've got, well, let's call it double jeopardy, for want of a better expression. I think we can then safely look for a short in that area. But that range now comes into play. So it's changed the dynamic a little bit. And we are at a support level, so we're in a buy zone. So I think Euro Aussie, going along with my theme of a weak Aussie this week, looks like upside, and I'd be prepared to trade it back to here. So I think that's also on the cards if you're fancying Aussie weakness, as I am. The last one I've got on my watch list is Euro Yen. Now, Euro Yen, I think, is completely messy, but if you have a look again at the big picture's telling me double top sitting here. That's the monthly chart I'm looking at, of course. Drill it down to the weekly, completely messy. But if you consider that we've got a range in here, and it is messy, it's completely messy, but we've got a false break to the upside, second false break to the upside, third false break to the upside, lower low, lower high, lower low. I think this has got downside written all over it, but again, you go back and this is the question that we asked like 15, 20 minutes ago. Can you trust the yen? And if you can trust the yen, if you think it's absolutely in within the realms of possibility, let me put it that way, that the yen can strengthen, then this is actually a trade that you could take right now. And you could put your entry there, you could put your stop loss there, or if you want to be a little bit more conservative, you could put your stop loss there, and I think you'd be doing okay. First take profit here, which will get you about 1.5 to 1, something like that. If you look at this in a little bit more context, you've got a left shoulder, you've got a head, you've got a right shoulder, you've got a neckline through here, which has been broken and retested. I don't think this is the worst trade on the planet, frankly, and not sure why I haven't got it in my chart at the moment. In fact, I will take it. Entry there, stop loss there, more conservative stop loss there, and get some profit in the bank there. That's euro yen short. They're all the things I think are possible, Ash, before all these numbers come out. And I'd really like to get into those trades before that's the case. Sweet, you're in Euro Aussie. Happy days. Why aren't I? Why didn't you send me a signal, Sweet? What's going on? I hope it wins a big one for you, mate. So, yeah, that's about me, mate, for the week. I think it's going to be a very interesting week once those numbers start to hit us. We could see a little bit of volatility, right?
I think so. I mean, we're likely to see a bit of volatility as the numbers get edge closer, as well as when they actually hit. We've got looking kind of at this week, just before that data comes out, we've got a little bit from the United States later, and quite a lot from Japan tonight. And then after that, really tomorrow is quite interesting for Chinese data. Manufacturing PMIs, that might well affect the Aussie. You got the Aussie retail sales as well tomorrow. So and it's predicted to come out a little bit lower on those retail sales. I'm not quite sure why, but that is.
What is that? Is that year on year, month on month? What is it?
The retail sales number is month on month.
Okay, so that'll be December figures, right?
Yes.
Cool.
Yeah, December figures for that, and obviously China as well. So you've got back-to-back countries reporting which could affect the Aussie. That's what we're looking at. Which currency would it affect? And it looks like it would affect the Aussie on that front. And then really, then we start to ramp up towards the end of the week. So that's Tuesday. CAD. You talking about the Aussie CAD? GDP from Canada reported on Tuesday as well, coming in so far by prediction at 3.5% from 3.1. So they're looking for some expansion year on year from GDP from Canada. So that's certainly not too dusty if that was to take hold. Then it's got some more data from New Zealand, and then on Wednesday we do see a really big data print. A slew of data from the United States.
Are we seeing your screen? We're not.
No. Okay, let me just bring this up. So we got the economic data here.
Because it's a massive end of the week. There's no question.
It is. It really is. I mean, this is look, this is the day. So Wednesday, the 1st of February, and this is the day. I mean, we get a slew of data from the United States. ISM, JOLTS jobs opening. This one's become really important. Never used to be quite as an important number, but it really is now. And then when we start to come down, then we get the statement. We get the interest rate decision and the statement and the press conference. So late on Wednesday, certainly late for us in the UK, is when I would expect the market to really start to take a grip. And you could wait for that. If the dollar's going to strengthen, it's so low. If this comes out and it is relatively hawkish, then you've got plenty of time to get into the dollar, in my opinion. And then on Thursday we got the BOE. So we got Wednesday and Thursday. We got interest rate announcements. Bailey speaking as well. What happens to the pound? pound dollar could be a trade if they go in opposite directions somewhere along the line. And then even Friday, we get these hourly earnings, so we get inflation data, ISM numbers as well from the United States on Friday. So there's lots really on Wednesday, Thursday, and Fridays when it really starts to ramp up. And it might mean we don't get the movement we need in these early parts of the week, which is, if we get stopped out on any of these trades, best just to let them go and wait for slightly better signals, or get it a little bit closer to the data print and see if we can get anything going off there. But big week, mate, big week, and not one really to get emotional about.
Yeah, look, I think I need to actually stay up a little bit this week because I'm tipping ranges until Wednesday, Thursday. So that kind of plays into my playbook. So I need to take advantage of that. I think if I'm wrong, it doesn't really matter at the end of the day. If they break out, they break out. But I'm tipping ranges. And one thing I wanted to leave you with, because no, we're not even near the end of the show. We're getting close, but I've got to go. And I know you're pressed for time as well. So keen to trade the euro dollar as a breakout with the FOMC statement, because you could get a double banger there. If FOMC, well, it doesn't matter which way it goes, if it breaks out of the range of Monday, Tuesday, Wednesday, and the ECB backs that up, then you could get an absolute clanger of a trade out of that as a breakout.
Yeah.
So let's say the dollar or the Fed is hawkish. I don't think they will be, but it doesn't matter what I think. Let's say they're hawkish and the dollar rallies. And then let's say that the ECB is not so hawkish, but a little bit neutral, thinking, well, maybe we're coming to the end of this and blah, 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 blah. Then you're going to get a double whammy. You're going to get the dollar rallying and you're going to get the euro weakening, right? So I think if I'm in the position to wake up at whatever it is, 5 o'clock in the morning, 4 o'clock in the morning, to trade the FOMC breakout, I think that would be a very, very cool thing to do. Those of you who aren't aware of how I do that, I'll give you a brief description of it if you like, and we can probably wrap it up from there.
Sounds good, mate. Incidentally, I mean, this is where the pound might be, maybe even more interesting, because you've got, two central banks reporting on the same week.
Yeah, same. Yep.
Yeah, if and where you would more likely get FOMC bullet, hawkish and maybe Bank of England dovish. You're right. I mean, this will go. And look at it. I mean, we are at a double top here with a pound. So it is kind of giving us some signals that that there might well be a push to the downside. If we bring up a little
problem is you've also got an inverted head and shoulders there, so you bang on that neckline.
Well, let's have a look. Let's just have a look at an oscillator as well, and see if the oscillators are showing any kind of divergence here.
Is that a new ride at a fun park?
There is divergence here, mate. I mean, we got equal highs here while the oscillator is making a lower high here. So there's just a little bit of divergence, and divergence is when you see price, for those that aren't sure, when you see price at making higher highs or at least equal highs, and the momentum actually weakening. So there is some divergence between the highs here on this double top. So there's a signal that there could well be some downside coming on the pound, and that does make that quite interesting. How you trade that is really going to be your department, mate, and I'll leave that to you to explain. But yeah, I think you're right, mate. Some breakout stuff going on here could be quite interesting.
Yeah, I think that's my focus as well. Aussie weakness and breakouts for the FOMC statement. And as you say, both pound and euro could be interesting. All right, I'll share that with you before we go.
Good stuff.
And here's what I plan to do, guys. But again, I've got to be awake at like 5 a.m. in the morning to achieve this, because it can't be preset. It has to be based on on price action. So in the case of the euro, what I'll be looking to do here is isolate the range to start with. So what I mean by that, I use Monday, Tuesday, and Wednesday, high and low. So at the moment, if that were to be the case, the high and low is currently today's bar, right? Though I use the 4-hour chart to determine that. So all I do is isolate the range. If tomorrow, the high of tomorrow is, let me get rid of that. If the high of tomorrow is up here, then I'll move the range to up here. If the low of tomorrow or even Wednesday is down here, I'll move it to down here. So I'll determine the range of Monday, Tuesday, and Wednesday as they sit, right? Because we're going to get the announcement or the statement on Wednesday evening for most of us. If you're in the UK, it's Wednesday afternoon or maybe evening, but it'll be certainly early morning my time. So I need to isolate that range wherever it is. So Monday's range, Tuesday's range, Wednesday's range, high and the low of Monday, Tuesday, Wednesday, as it stands prior to the announcement. Now, the key to this is not to trade it. You would have heard me say earlier with the gold trade on Thursday that it's perfect when it's in the middle of that range. When price is in the middle of that range, when the announcement is made, it's absolutely perfect. So what I'll be looking for is high of the range, low of the range, and price to be somewhere near the middle when the announcement is made on FOMC. What I do is place an order 15 pips above the range and 15 pips below the range. So a long 15 pips above, short 15 pips below, and the stop loss is in the reverse order, right? So if the long gets triggered, you cancel the short and vice versa. Then what you do is get 1-to-1 and do nothing else except move your stop to entry. And the reason for that is you're looking for the follow through. You're looking for the FOMC statement to take you into trend. So you don't really want to take any profit. You want to make sure that you're safe in the market when you get 1-to-1 by moving your stop to entry. And if it doesn't go to trend, SH1T happens. If it does go to trend and changes the trend of the day or continues the trend of the day or the week or the month, then happy days. And then if you get the ECB statement, or as I said, the BOE statement, if you're trading pound as a breakout, and that goes in the same sequence, in other words, Fed hawkish, pound or euro, you're going to get a fantastic reward out of that. You really are. It depends entirely on how it sets up. So if the range is 400 pips, forget it. So if this goes nuts and breaks out of the range already, either way, forget it, because it's going to be too hard. But if you've got, say, a 70 pip range between Monday, Tuesday, Wednesday, or even a 100 pip range, which is an ATR roughly on euro dollar, then I think you're in good shape. But don't take the trade if you're near the high or near the low. Make sure it's in the middle of that range to allow for any whipsaw that may take place. That will be it. And I'll send that out as a trade to the Telegram group if that's the case. At about 5, I think it's 5 a.m. my time. I'll have to have an early night, Ash, Wednesday.
Okay, mate. All right. Well, thanks as always for being my trading buddy, and everybody in the room. Thanks for joining us today, and we hope you enjoyed your week last week and managed to get a good rest. Enjoy the rest of your day. Enjoy the rest of your week. We'll be back Thursday as always, won't we, mate?
You bet we will. And next Monday, George rejoins us awesome. For the first time in 2023. And we look forward to that very, very much. Thanks, as always, mate, for being my trading buddy. Thank you all for joining us in our Trading Buddy show. And we hope that you're welcome, Tajul. We hope that you can join us on Thursday as well. Have a great week. Bye-bye for now. See ya.